Hi, everyone. So in 2025, as of January 2025, the Medicaid limit for gross monthly income was increased from what it was in 2024, $2,829 to $2,901. So we saw a slight increase in income from 2024 to 2025. These increases are typical year to year. They normally are meant to account for inflation, things of that nature. It wasn't a huge increase, but it was an increase. So what this means is now someone could potentially qualify for Medicaid if the amount of gross income they're taking in every month is not over $2,901. Now, we still also have Medicaid's asset limit. The asset limit is $2,000. So that means that at least one day out of the month, you have to be able to show through bank statements or other financial statements that your assets do not total more than $2,000. So what's the difference between the income and the assets? So your income is, of course, going to be checks that you're receiving on a monthly basis to sustain your life and that are included in your taxes, if you're reporting taxes, as income. So these would be things like Social Security. So if you're getting a monthly Social Security check, this is income. If you have a pension and you're getting a monthly check for a pension, this is also income. If you have required minimum distributions coming to you from a 401k, IRA, some type of retirement plan, this is also going to be income for you. So essentially, Medicaid will add all these up and look at them. And if you're under the $2,901 threshold for 2025, you will have to take certain measures or get certain things in place in order to qualify if you're trying to qualify for long-term care or in-home care, the in-home waiver, or even care can be set up at an assisted living facility. Now, as far as assets are concerned, they're a little bit different than your income. So assets would be things like cash that you have in a bank account or stocks, bonds, CDs, things of that nature, things that you might have in an investment account, as an example, will count as income. If you have a second property, that's going to count as income. Your homestead, up to a certain amount, will not count against you, and it's a pretty high amount in the 700,000s. So you can have your homestead, and the equity is not going to count against you or count as income. One vehicle is not going to count against you, but if you have multiple vehicles, those are going to count. And where we see an important distinction made, which is good to know about, is things like retirement accounts. Even if you're not of the age where you're required to take minimum distributions, you should consider taking monthly distributions because that will actually remove the principal of the account as an asset for Medicaid purposes and make it so the minimum monthly distribution is counted as income. This particular type of asset, a retirement account, won't be treated as both an asset and income. And the way to get the actual principal excluded, which is oftentimes going to be more valuable to the person to not have the full principal amount included as an asset that you would have to spend down, it's better to set up monthly distributions. And the monthly distributions are going to be counted towards your income. And again, there's ways that we can work with your income or fix it so that you can qualify. But that principal, if you are taking monthly distributions, isn't going to be counted against you as an asset. Other assets that you have to pay attention to are things like life insurance policy. If it's a term policy and just has a death benefit, then you don't have to worry about it because it's not an actual asset to you. It only gets paid out upon your death. However, if you have a whole life policy, that policy is going to have a cash surrender value. That cash surrender value is very much considered income for you. So oftentimes in that scenario, what we'll have our clients do is potentially take out a loan against the cash surrender value so they get that amount. It can be added into their assets, but we can work with that for planning. And there are lots of planning tools, especially here in Florida, that can even be done last minute in order to help someone qualify for both that asset limit and that income limit. Now, the first step is, of course, understanding the difference between what's counted as an asset and what's counted as income. Once we can sort all of that out, then we can talk to you about everything that's available to you in order to handle either both your income if it's over and your assets if they're over, or one or the other. And that's why you should always speak to somebody who knows elder law very well, or an attorney who is very familiar with Medicaid planning, because they're going to know the tools that are available to you in order to qualify you for Medicaid. And yes, there are tools out there that aren't even subject to Florida's typical 60-month or 5-year look back period. So if you are currently thinking Medicaid might be in your future or even immediate need, but you're concerned because you're over the asset limit or the income limit, it is worth reaching out to a Medicaid attorney, an elder law attorney, to see if there are options available for you. And if you're in Florida, we would love to help. You can reach out to our office. We're at Cause Law Office, the non-stuffy attorneys, and the link is in my bio.